Good morning, good afternoon, good night, wherever you're tuned in from here to the BitLab Academy Daily live stream. Welcome to the show. My name is Kellam, and it's an honor to do this and have you all here with me watching and joining in here in the chat. All the activity that's been happening in the chat the last week has been phenomenal. I love watching the community grow, but also watching all of you engage. As you can see, I've been trying to make a very specific effort to really engage with chat a lot more because there's so much that we talk about on this channel. You know, we want to bridge that gap from beginner to pro and give you not just TA, but why you do it this way and what this is and how to think through things and how to organize your strategy. Some days are more exciting than ever, but I got to say, shout out to all of you that have been here from the start. Throw in that OG if you've been here since the first couple weeks that we started. I see a lot of familiar names in the chat every day, and I just want to say how much I appreciate you all being here. And you know what you got to do? You got to hit that like button, hit that comment, or hit that subscribe button and ding that bell. And if you're watching, get engaged in the chat. Where are you tuned in from? Where are you? Where is your computer desk right now? Where are you sitting in the U.S.? What state? If you're sitting somewhere else, if you're somewhere else in the world, I want to see how far reaching we got this. We want to tie this community together. It's not just about me talking. It's about all of us engaging. So again, my name's Kellam. And welcome to the BitLab Daily Show. We got Mr. Crypto Nobles coming on here in a little bit. I'm kind of looking off into the wings for him for whenever he comes on. But let's go ahead and do some shout outs. We got, I think, Shake and Bake. It's Shake and Bake and I helped. Shake and Bake was the first one in the house today. Good morning, good sir or ma'am. Or him or her or Zay or Zay, wherever you are, wherever you are. How you doing? Crimson Caravan Company, Crypto Kid, Alexandra G, Karen Swigart Harris, a mellow fellow, B Team Crypto. We're going to get you on the A team. Is that all right? Who else we got? Eric Browning. So many people learning. I love always seeing learning in here because that's what we do here. We learn. Am I having issues? Getting a lot of notifications. No, I think I should be good. Throw one in chat if there's any issue with any of the audio visual or anything going on. I have a private message with my with my mods on Discord, and unfortunately I get a lot of notifications from other channels too. So when you see me looking confused, I'm checking the Discord and realizing it's dings in my ear from another channel. But Australia, we got Australia in the house. We got Los Angeles, Virginia, South Carolina, South Kakalaki. That's right. We got Jersey. I'm in Atlanta right now, but I will be back in New York in about a week and a half. As you know, we got some big things that we're doing here at the BitLab. The brand new website, brand new courses, even a huge update to the indicators, the BitLab indicator stack, trading stack. And all this is going to be coming out while I am here in Atlanta. So I just want to say I'm so excited about that, and I'm really excited to share it all with you. Matt C., my boy, unforgettable name. We got so many. So is Brooklyn, New York. Hey, Peter John Lurum, I guess. Yeah, I actually live in Brooklyn. Live over near the gate stop on the JMZ. UK, Nashville. We got a good group in the house today. Yeah, I'm feeling good. Markets. It's crazy how much we can feel shaken about, our emotions stirred and our hopes and our fears, and back and forth in the same week, thinking we're about to break 30 and then dropping down to 27. And part of you is like, man, this is about to crash all the way back down, isn't it? Well, no, not necessarily. Sometimes the market is just doing a little bit of a cleanse. But I see we got 91 people in the house right now, only 34 likes. Hit that like button. Hit that subscribe button. Ding that bell. We're going to be getting this going. Let me see if okay, he's not in here yet. Hope he's all right. Bing, bing, bing. Okay. We are live, brother. Join when you get a chance. There we go. Now, so what I want to do here is we got to look. We got to take a look. We got to look at as my boy MDX says, we got to look at the bad boy Bitty. We got to look, we got to check out what's going on here because we can mute all of these drawings. We can even mute all the indicators. We can remove all indicators and we can just look at this. Just look at this chart. Okay. We want to get a grasp. We need to look at the macro, especially coming up in the end of the month. It's April 28th. So I believe the end of the month is Sunday. But we're coming up. So this is the end of the month in terms of where the futures are. So the CME futures will be closing today for over the weekend. But what we can do is we can come over here and look at the Heikin-Ashi candles, which essentially the difference between Heikin-Ashi candles, which if you don't see these two options, you can just, where your candles are up here at the top, just click that little down arrow and you can just put a star on the candle pattern, the candle structure that you like, whether it's candles or bars or hollow candles or Heikin-Ashi. I prefer, most commonly I use traditional candles and Heikin-Ashi candles. However, on macro stuff, I like line break as well because that's a whole nother story. But Heikin-Ashi candles, essentially, if you look at the difference here, look, it's not like the price structure is that different. We can see there's not that much different. But what you can notice, for instance, if you look right here, you get two green candles on traditional candles, but if you go on Heikin-Ashi candles, it's red all the way down. So why is this? So what are we looking at here, and why does this work particularly well, especially on like the monthly chart? Well, when we're looking at the monthly chart, we essentially, Heikin-Ashi candles are very similar to traditional candles, except they kind of, I don't want to say aggregate, it's the wrong word, but it sort of populates the candle body, which, you know, for everybody, if you don't remember, you have these shadows or wicks, which are these small little lines on top and bottom. That's how far the price has traveled within the time period of this candle. So this is a 1 month candle. So this price had oscillated all the way up here and all the way down here. But with Heikin-Ashi candles, the body of the candle is where the majority of the volume of that candle traded, okay? And so when we see this flip bearishly, then this means the majority of the volume on this candle, on this time period, has moved to the downside. And so we can see this. This is a really easy way to get a good idea of trends. And we can see right here, 1, 2, 3, we're about to close our 4th month. With a pretty strong green Heikin-Ashi candle. But what I want you to notice here is if we come over here to traditional candles, you see how different these look? Very strong bullish, bullish candle. This is called a Morning Star. Oh, it's kind of a Morning Star doji, kind of not, because we have, this is not quite a doji because there's not equal wicks on the top side and bottom side of this candle. By the way, just shout out here, in the new BitLab courses, we have a whole candles course that talks about all the, individual candles, different structures, how we can use just even 1, 2, or 3 candles to get a good idea of what's going on with the momentum of price action. And then, of course, the broader, more chart formations and candle patterns. When we talk about bull flags and inverted head and shoulders and double bottoms and channels, cover all that. We've got so much stuff, all video content broken down. 7 to, some videos are a bit longer, 7 to 12 minutes, but about 8 to 10 minutes is kind of, it's kind of where we break down everything individually. So again, if you have not yet, make sure you come over to bitlabacademy.com. Join. I mean, I'm talking like I would join as soon as you can, because when we go live, the prices will be going up shortly after we go live. And if you join before those prices go up, you get to keep the current lower pricing for the life of your account. And while we're here just looking at the BitLab stuff, I do want to say, make sure, that's not it. Make sure, let's go. Make sure you come over to the, give me a follow here at Kelly Kellam, and make sure you're spelling it right. I only point this out because there's so many fake profiles of me out there. People just try. I hope they get this stuff sorted out on the internet one day with all this fake scam stuff. But come over to the BitLab Academy Twitter, which is at Academy BitLab. Come over here and follow, which is step 1. If you're not following yet, retweet this daily tweet and hit this like button, boom, on this tweet. We, later today, towards the end of the stream, we're going to be spinning this wheel, picking that random winner. So go over here, get involved with the community. It really helps drive our ability to share this education with other people. I feel like we've got somebody in my ear. I can't see him on the screen because I'm looking at my thing, but I'm going to throw it over to our wonderful guest in just a moment. After I wrap up this thought, we have this macro. We've got to look at the monthly looking at the end of the month. We have these 2 different candle options, traditional candles, Heikin-Ashi. Heikin-Ashi is looking like it's almost like it's cutting out the noise, if you will, because on these traditional candles, this is looking, certain, uncertain, certain, uncertain. But coming over here on the Heikinashi kind of gives you I don't want to say more confidence, but it allows you to determine where the volume has suggested the momentum is within a trend. And so we're going to be looking at this. We're going to be looking at a lot of stuff in the charts today. We're going to be talking about some of the earnings. This is a big last 2 weeks really, but this week has been huge because we had some of the biggest tech companies and other Fortune 500 companies report earnings this week. Of course, this is the Bitcoin and crypto channel, right? We've got to look at the broader picture to understand what's going on, especially in these times when things feel so uncertain. We need every bit of edge we can get. So everybody, strap in your seatbelts, buckle up. We're going to throw it over here. I believe my boy is in the house, and he's looking here. He's got the sunshine on that beautiful face. How you doing, my friend?
Hi, good morning. Thanks for having me.
Yeah, absolutely, man. How you feeling? Big week. Did anything stand out this week to you that more than the other, or is it just another week in crypto trying to take all the ingredients in?
Well, I did spend this weekend at Consensus, this week at Consensus. One thing stuck out is, what did they not talk about? Bitcoin. No one talked about Bitcoin. And it's not an altcoin conference. It's supposed to be the biggest conference in crypto. That leads me to believe.
Consensus is?
Yeah, Consensus is supposed to be the biggest conference in the world. Maybe Bitcoin Miami is tied with it. But, I listen to a lot of content and no one is talking about Bitcoin. No one's talking about the dollar. There's a lot of content where people are rehashing FTX, but I'm like, bro, banks are failing. I mean, hello.
Yeah.
So no one's talking about Bitcoin. No one talked about Ethereum. And, that's all I do want to talk about, really, in terms of excitement. So that's my opening.
Well, hey, you know what? It's the way I kind of think about that is this. It's like sometimes the best opportunities is when everybody else is looking the other way. So maybe this is a soft signal in the market that, we're not paying attention to where we need to pay attention. And we can also see that, in the dominance chart on Bitcoin. Nobody's talking about Bitcoin, for instance, at that conference Consensus. However, we're seeing Bitcoin outperforming the entire crypto market, right now. And, this kind of ties into one of the things I wanted to bring up today and get your thoughts on it. For everybody, if you don't know who this gentleman is, if this is your first time here, first off, hit that like button, subscribe, and ding that bell below. But this is Mr. Bill Noble, and I'll pull up his socials here in a little bit, and you can see him. You can find him at crypto_noble, which is Noble. He's a regular guest on the show, basically family member of the show now. Have him on most Fridays, and he's been in markets probably since about the time I learned to tie my shoes. And he's got a wealth of information about just experience within the traditional markets as well as crypto. So this week has been. Maybe it's just because the week is most current, but I feel like every week this year has progressively been more important about the data that's come out, right? And so this week we had, what was it? I mean, it was Meta, Google, Amazon, Coca-Cola. I mean, there was a litany of major Fortune 500 companies, releasing their earnings this week. And about 2 weeks ago, we had this sort of softening of some of the unemployment data, and it was sort of hopeful about what may or may not happen with the FOMC and with Jerome Powell and all these things. And then this week, we get a kind of counter to that, which isn't necessarily a bad thing. We're seeing things that are supporting, I think, what people like you and I have been expecting. There's not going to be a pause probably anytime soon. Everybody was wanting that on one hiring of the unemployment data. They're like, okay, now this means they're going to pause, and then that came down almost a week later, and now we have all these earnings reports. We're seeing the GDP down a little bit, but there's still growth. There's not really the suppression that I feel like Jerome Powell's looking for. So how do we take us Bitcoin, Ethereum, altcoin, whatever in the crypto ecosystem? How do we take the data from this week and look at the market, especially coming into the April close, and a lot of talk around sell and may walk away, but I feel like things are kind of getting pushed along here, and it's just acting a bit, I don't want to say contrary, but it's acting more unpredictably than regularly. How do we take this data? What's a healthy plan of action right now?
All right. Well, you made the point earlier. The first thing you want to do is talk about, think about, and get long about, the stuff that no one's talking about, which, as of this conference is Bitcoin and Ethereum. Now, economic data. It is so easy to get caught in an endless mind spin because they love this stuff in legacy. Are they going to pause? Is it a recession? Okay, here's the deal. The Fed has lost control. They don't have control over inflation. Anybody that has to go to the grocery store knows this, right? They don't have control. And they're probably going to have to try to get control by continuing to tighten, right? They're just going to keep doing it until they actually break something. Like legacy has been so entitled for so long. They're like, well, it's the Fed's job to prop us up and make us go up. They can't break us. Okay, well, that's over. All right. So they're just going to do 25 basis points at a time until something breaks. Now, that said, most likely people in legacy are too bearish. They're too bearish stocks, and they're not bearish enough on the dollar. So the answer to your question is the impact of data, the impact of price action in legacy. It's almost total focus on the dollar. And as far as I'm concerned, the dollar is basically down only. We can unpack that, but it's less about the data and more about the dollar.
Yeah, I definitely see that. I saw a chart. Let me see if I can find it. I saw a chart. I think I brought it up. I'm going to post this. So if you want to look at it as well, Bill, and that is this right here. I just posted it in the chat. But the U.S., basically the global liquidity versus Bitcoin, and try to track somewhat, not track, but looking at the correlation rather than even looking at the, U.S. dollar. But like just looking specifically at the global liquidity, U.S. liquidity, and Bitcoin price action, and seeing obviously a very strong correlation, and it makes sense. You have more liquidity in markets, then there's also flight's the wrong word. There's going to be an opening of the gateway towards risk when there's more liquidity, right? So, do you feel like do you feel like the U.S. economy, and for instance the economy in China and Japan, do you feel like there's any sort of sense of like an economic race right now do you think there's going to be a correlation going into the next year? Or do you think that China is going to continue to pump liquidity so they can sort of prop themselves up in the sort of global economic arms race here? Or is there going to be a split here where, China really is the one that's driving the liquidity for markets, and it doesn't quite matter what the U.S. does? What's the potentiality in all these things? And for everybody looking, this is the chart, and I'll be bringing this up a bit later, but just your thoughts on that, your thoughts on all that. Mr.
Okay.
Noble.
So the Chinese want to keep their currency as cheap as possible because they're trying to convince people to come over to their currency. Right. The reason people don't want to buy the US dollar for trade is because the dollar is too expensive relative to other currencies. It's the same way a consumer would walk away. They're like, oh, well, this is too expensive now. Now, the Chinese want to keep their currency cheap. Their commercial real estate problem is bigger than ours. They're coming out of a COVID lockdown. The Chinese never met any printed money that they didn't like. So they're going to rock on. I think the thing you do have to focus on is any potential geopolitical issues with these guys. You've got 18 Russian warships passing Japan. You've got the sudden deployment of a U.S. nuclear submarine to South Korea because of allegedly an impending North Korean threat. I mean, how do you think the Chinese feel about that? So if there's anything to talk about with the Chinese, it's the risk. It's the risk of war. And it's also possibly a risk of war on the dollar. So I keep bringing everything back to that. Certainly, the Chinese are not buying our treasury bonds. As a matter of fact, the money flowing into the United States to buy treasuries is drying up. It's not flowing in. Why? Because the dollar's too expensive. No one wants to buy the dollar, right? Because that's what they do when they buy the dollar. They either use it for trade or they buy our debt and collect some interest. So, again, this all comes back down to dollar downside. And anybody who's either not talking about Bitcoin and Ethereum, right? Last year, they were obsessed with the DXY. It's like, oh, it's at 102. Oh, my God, it's at 100. That's a crypto bottom. And no one's talking about it. No one. And I continue to want to talk about DXY below 100 and eventually at 80.
Well, you know what? Let's do it. Let's pull up the dollar chart. Let's pull up the dollar index. Let's see what some of the things and levels you're looking at, because, for anybody that's been watching this show for a while, and if you've been watching really any crypto show or crypto content worth its salt, they're not only talking about Bitcoin and Shiba Inu, and no, they're looking at the things that impact the assets. This is how you get ahead in these markets. You look at the things that can impact the assets that you're investing in. So, and in this case, we're talking about fundamental data. In this case, we're doing technical analysis on looking at the dollar index. But in reality, I look at it more as a fundamental analysis of things that impact the assets that we are trying to invest in and navigate the markets of. And the strength of the dollar we've seen has had a drastic impact or a strong correlation with dollar index up, then risk assets down. And it's not 100%, but it's pretty darn close. And it's a pretty good measurement of if there's flight to the dollar, aka the dollar index is rising. That means that there's less liquidity going into stocks and especially riskier assets like Bitcoin. And then the further down you go on that core market cap, the more risky it gets, and the further those suffer. So this is something that everybody should be looking at. So for anybody that is here just for Bitcoin, we're giving you the edge to know what's going to happen with Bitcoin based on what's watching the psychology of the global market.
Yeah, and I can pull the dollar in, with the history of Bitcoin. You were mentioning the candlesticks. Everyone was talking about the Darth Maul candlestick earlier in the week. I can actually bring that together. So when you're looking at this chart here, the dollar index, this is a 4-hour chart. It's using something called hidden pivot analysis, right? And I it's a little outside the box, but the bottom line is I've got resistance at 102. And if 102 and change acts as resistance, then, I think it could go as low as 98 tactically, right? The Fed's going to come out in a couple of days. The FOMC meeting is May 2nd, which will be the market's next obsession. They're going to hike rates. They're going to talk tough on inflation, and they're going to acknowledge risks to the economy. And as soon as they do that, if the dollar doesn't go up, as I like to say, if something maybe should go up and it doesn't, what's it going to do? It's going to go straight down, right? The dollar has to be repriced. Now, that's not the end of the world. Like, everybody goes to extremes in crypto, right? Either, at DXY 111, the dollar was unstoppable per Bloomberg magazine. A couple countries decide, the French do a natural gas trade with China denominated in the Chinese currency. And all of a sudden, the United States is Argentina. The dollar's going to zero and a loaf of bread is $20. No. All that has to happen is what's happened throughout the whole history of the foreign exchange markets. You just have to have a very strong downtrend. I mean, in 1985, 1986, dollar went down 40%. Now, I was in high school for that move, so I missed it. But, the dollar went down a lot in the late 80s. It's okay. I mean, the world did not end. Matter of fact, it's good because the only way out of a debt crisis is to devalue the currency. Now, devalue is kind of a dirty word, but again, if you're at 102 and you can't get through 102, there's a tactical case for 98. Now, if you just say, okay, well, I got it, Bill, what about Bitcoin? This is Bitcoin from August to December of to December, early December of 2017. Now, recently, Bitcoin kind of not only woke up, but Bitcoin's now slapping everybody intraday. And everyone's like, oh my God, wow, I got slapped in Bitcoin. Like, yeah, man. The history of Bitcoin is as a highly volatile asset. If you're a legacy investor and you look at Bitcoin, Bitcoin is an altcoin to a legacy investor, right? Bitcoin is not historically grandpa that doesn't move. So the fact that Bitcoin Darth Mauled everybody, wick up, wick down, run the stops. I mean, yes, that's very unfortunate if you're a trader. right? For an analyst, I'm like, okay, this thing is awake now. Because when you look at 2017, there were, really nasty corrections, wicked wicks, right? Like this one here on the left. And if you go on the right before the big move started, I mean, this thing, went up, made a new high. Everybody thought it was going to the moon, and then they dropped it.
Are you looking at the S&P 500 chart?
I was looking at the dollar index chart. Maybe I wasn't sharing the right screen. Here we go. Right here. Sorry.
No, it's all good. I thought you were tying it back. I was like, I think he's on a different screen.
Okay, so this is the DXY chart with resistance at 102 and support at 98. Okay, this is Bitcoin from 2017, where you have these wicked wicks down, these sharp drops. I mean, this is when Bitcoin was going to the moon. So you would have these tremendous moves lower. You'd fake everybody out up here at the top and then drop it. So the history of Bitcoin is filled with these incidents where they just brutally shake you out before they take it up, right? And I have a feeling people may be sitting around saying, gee, I can't buy it before the Fed meeting because I'm too scared of the Fed. And that's when they just take it up to 32. Right. So, that's how you cross the dollar over with Bitcoin, because I don't see how the dollar index rallies. Right. And then, go ahead.
No, I was going to say, no, I agree with that. And to your point, one of the things I've been talking about a lot this week is, and I think I mentioned it last week with you on here as well, is the fact that this market is not in any way made to be nice. This market has a life of its own, and every single person, even every one of you watching right now, you're either predator or prey. That's it. There's nobody in the middle there. You're either taking money or giving your money to somebody that's taking it. So, and it's hard. I don't want it to sound so colorless and dark but that's what it is. The truth is you have to be absolutely as close to unemotional as possible in these charts and have the plan. The second you don't have a plan, exactly what Bill was just talking about, this week is a perfect example. We are getting that good high, and then it just absolutely, I went to an appointment and came back, and it was just like a death candle, that Darth Maul, just absolute, and then it immediately ate back up. And some people will speculate, at first it was the U.S. government selling in Mt. Gox, and they realized it was actually just an error on the Arbitrum, signaling or whatever. But it doesn't matter at the end of the day what the reason was something pumped or dumped. It matters, did I have a plan? Was my risk managed? And did I succumb to the emotionality of the moment and donate my money? Or did I take advantage of the moment where other people are being emotional and I took the opportunity? It's one or the other.
Right. And again, even if you got chopped up, the market's giving you a very distinctive message, right? It's like you're paid to buy this thing when it's down. It's as simple as that. I mean, you're paid to buy red. In other words, somebody interviewed me at Consensus, and they're like, well, it's a bear market. Now, to be somewhat of a, smart aleck, I was like, well, I mean, if you look at the Bitcoin chart, it really isn't a bear market. You know what I'm saying? Yeah. The Bitcoin chart is bottom left to top right, and it's paying you to buy it when it's down. And it did it again. I mean, it didn't pay to FOMO in at 30, but it did pay to buy it at 27 when it gave you 2 chances to do it. Okay, so people probably got stopped out. Right, I got it. This time around, ironically, now it's sitting at 29K, and it looks like no one wants to buy it because everyone's like, well, the last time I bought it at 29K, they dumped it. My argument is, like, if you look at some of the monthly DeMark charts, which we can get into, any dip that you've just had in terms of this overall uptrend, that may have been the dip. And sell in May and go away may be something you do at the end of May. Last year, you needed to do it in April because of Celsius. Yeah. This year, I'm wondering if it's the end of May.
Yeah, no, I get that. One of the things that I find interesting on this dip is that I tie in a lot of my analysis also with, I don't want to call it reinforcing, but broadening my view a little bit with the some particular on-chain data metrics. And one of the things that I don't want to say liked, because this is illuminating my directional bias, which I am aware of. I'm a bull. But one of the things that I notice is different on this dip versus, when we broke the falling wedge, it's like we're going to the moon, and then we stopped at 25,000, came down, pushed back up, and then dropped, had a kind of in that local region a short time frame lower low, only to then rocket up to 30,000. But on those two dips, on 24,000 and 25,000, long-term holders were reducing their supply, aka selling, while short-term holders was buying. Short-term holders were buying. Now, on this dip, what I find interesting, I did a whole chart post, multi-chart post the other day, and I've discussed it on the channel this week a lot, that this dip has seen the short-term holders reducing supply, being shaken out, while there's been a sharp increase in long-term holders buying this dip. So although I do think we could go lower from here, there's, and we did on the 4-hour chart, we're forming a little bit of a lower high right now. So there's things at odds with each other. And, this is maybe you can talk about this because you've been in the market so long. There's no perfect strategy. There's only a way to adapt and trying to find confluence in support of a direction, but also how can you disprove this direction? And so right now, if I just looked at the long-term holders buying while short-term holders are selling, that would lead me to believe that there's likely upside to come soon. However, there's on the medium time frames, there are some things that are showing a sort of necessary uncertainty and chop in the market still, despite the long-term holders loading up. So how do you contend with whether you get a new indicator package or you're just using the standard stochastics, RSI, and MACD, but how do you contend with pulling all this data together to figure out, to not feel like you're swimming in an ocean by yourself? Does that make sense?
It does. And the answer is not necessarily in a textbook. So I'm looking at the Bitcoin 89-minute chart. And here's something I learned the hard way at Wall Street, right? Like when the Fed first started to do QE, first like 2 or 3 years, I was like, oh my God, this is going to backfire, create inflation, and the whole world's going to end. But that's not how it played out, right? They just were determined to keep the stock market moving up. And the hedge funds that figured this out, right? The hedge funds that figured out that there was a constant flow of money underneath the market, they got their charts out. They never wavered. They had high conviction. So big hedge fund manager recently talked about the only conviction trade he had was short the dollar. The key is, it's not to get dogmatic and inflexible, but sometimes having conviction can help you not get shaken out. Because when they shook the market out in 2010 and 2011, and I would get bearish sometimes and stay too bearish, the guys who were down there buying Facebook and Amazon, right, on these huge 20% corrections in equities, they became the millionaires. The key was not to become dogmatic and hold on to losers. The key was, if you could buy dips and make money, to increase your conviction, right? So if you look at Bitcoin on an 89-minute chart, wick down, come back, wick down, come back, massive wick down, come back, just now, wick down, come back. Okay, now, where is this money coming from? Well, it's not coming from the Fed. That's an older story. This is coming from people who are realizing that $1 in the bank, $1 in Bitcoin is better than $1 in the bank. And the same thing is happening in stocks, right? Like everyone says stocks should go down. I had the chart up here. I can pull it up, right? Okay, here's S&P 500 weekly. Okay, so obviously we can all see that it's at resistance. Everyone's kind of chomping at the bit to get short. Okay, stocks are dependent on earnings. Fed pauses. It's kind of convoluted, right? But it's not backing off from resistance. People may be too bearish here, and people are too focused on equities because this has done nothing, whereas Bitcoin is in an uptrend. So how do you not get derailed from your plan? Well, you have to manage risk, but you also have to believe. And if there was ever a time to believe in crypto, this would be that time. Right. So if you've got an inherent faith in crypto, right, and you can say, all right, I'm going to open up my chart book, and this to me looks like an uptrend, particularly since a kind of a outside the box support point at 27 held not once, right? Like they broke out of it and then it came back and held. When you start seeing this, this is the market's conviction, which then needs to become your conviction, right? So if everybody and their brother was down there at 27, okay, that means that somebody may push it to 34 because, mind you, nobody in legacy that needs to get their money out of the banking system, or nobody in legacy that's going to look at this chart, right? People in legacy think differently than we do, right? They're like, oh, wow, well, I can't buy Bitcoin because whatever, right? Somebody in legacy is going to go, well, this was at 68 2 years ago, and now it's at 30. And in January 2021, the market took off from 27, right? So why not take a shot? Why not? So it's the market's conviction needs to become your conviction.
Yeah, I like that. It's, you know, we all have a good trade. If you haven't yet, anybody watching, at some point you will have a good trade. And the most damaging thing that happens when anybody has a good trade, especially if it's particularly good, maybe you just hit right, you know, it's that trade that just went through right when you entered and it just moonshots. I think that it can be incredibly damaging because then there's almost like the humility. There's a flight from humility there a little bit. We start to think we're a great trader because we happen to get a good trade. And the goal isn't to win 9 trades out of 10 because there's very few people, if ever, that have had an average of 90% hit rate. The goal really is, how do you protect your capital and not lose money? And I'm tying this back to what you said, you know, the market conviction, what the market's going to do. This goes back to me talking about, you know, there's predator and prey in the market, and the people that are emotional are prey. The people that have a strategy are predators, and the people that have a strategy have an absolute and established risk management strategy. And regardless of where they want the market to go, somebody may want the market to go up, but they could make a ton of money on the downside because they're tuning in to what the data from the price action and what the data from their indicators, what the data from their analysis and their awareness of the broader ecosystem is, where the pressures are in the market. And they're playing on people that make money in the market is you're looking at where you think the majority of other traders are going to move the market next. So riding the wave of the conviction of the market is essentially counter trading people's emotions is essentially what you're doing. I think it's a really good point.
Yeah, Bill Williams was a famous technical analyst, like on the quant side. And he said, you got to want what the market wants, right? You have to get yourself in line with the market. I mean, when he used to teach trading school, he used to have guys sit down and write 3 pages of stream of consciousness, whatever was in your head. He would make guys dump it. That's 3 written pages. That's a lot.
Yeah.
Right. So that's what he would do to have people clear their heads, right, before they actually sit down and look at markets. Right. Now, back to this idea of, you know, the worst thing that can happen is that, you know, you can buy it and it goes up 30%, like that minute after. You're right, that is. And here's why. It's because the best trades are the toughest trades. Period. I mean, that's Paul Tudor Jones. Right? Nobody after FTX wanted Bitcoin. Nobody wanted it below 20K. 20K, the biggest point probably in the history of crypto technical analysis.
You know,
2017 high. No one wanted it.
You know what's interesting too about this cycle is, of course, there's a lot more Bitcoin in circulation than there was in 2016, 2017. However, there's a sense of maturity that I've been seeing brew in the crypto ecosystem, partially also because I don't want to call it a silver lining, but partially because of the cascading liquidations and insolvencies of 2022. From all the way from Luna all the way through the FTX collapse, because we've seen, I've shared it on stream, and I'm sure you've seen this with other people's postings as well. We're kind of at record high illiquid market right now in terms of the amount of Bitcoin on exchange. And so not only do we have more in circulation, there's a maturity that has, awareness, I should say. I won't necessarily call it maturity. There's an awareness that has come because of the flight from banks and the uncertainty of banks collapsing on the traditional side. But then in addition to that, even further supported with cascading insolvencies in the crypto ecosystem, and people that had their coins not in their own private wallets. People lost billions of dollars over the last year because they didn't take responsibility of their assets, and part of it is greed. Even if the greed is only because they could get a 4% stake. I remember somebody asking Michael Saylor about a year and a half ago why he wasn't staking his that time it was about 130,000, 135,000 Bitcoin. He goes, I don't care what the APR is. It's not worth the risk of me giving my keys to somebody else so I could get a nominal amount. It's not worth a 4% staking reward. So we're seeing now coming into this new cycle, the narrative for which Bitcoin was created, the 2008 housing crisis and the economic collapse. Right. And then we see, some of the collapses because of similar mismanagement and misappropriations of funds within the crypto ecosystem, especially with FTX, and then people over leveraging, thinking that the prices were going to go to 100,000. And then in addition to that, now we see that followed up. I'm actually happy it happened this way, that the insolvencies happened in the crypto ecosystem first. And then we saw the cascading sort of bank collapses, because it leaves the narrative more now with the banks, the flight from this notion that banks are safe. And so we're seeing a more illiquid market while we're also seeing the narrative being supported for what Bitcoin was created for. And now we're going into a period that we all want to look historically, because that's how we figure out what the roadmap is in some context, looking left. But we're also going into somewhat uncharted territories because this narrative is changing so quickly. It's going to be very interesting to see what happens over this next through the halving and the post halving, hopefully parabola. But we have another bank right now. Speaking of that, First Republic, they're essentially collapsing. Now there's talks that there may be a government bailout for First Republic. Do you think that will have any sort of Do you think that will have any sort of impact on Bitcoin? And if so, or if not, why?
Well, first we have to define a bailout, right? A bailout just means, the Fed prints and makes the depositors whole, right? And that money is delivered through a zombie bank, AKA a bank that's created by the government. Right. So every time they have to do a bailout, like in 2008, they were like, oh, my God, do we have the political capital to do a bailout? That's why Lehman was allowed to fail. Now they're like, oh, we can take another bank over. Oh, awesome. You know what I'm saying? Step right up. All right.
Yeah.
Dollar coin coming soon. So, they have no problem. Nothing is free. In business school, I learned an acronym. It's called TANSTAFL. There's no such thing as a free lunch. So yeah, depositors are going to get bailed out, but their money's going to be in a state-run bank. Okay. And then it's just another way for the government to have a state-run bank. It's dangerous. Now, how does that affect Bitcoin? Well, people are not stupid. This is the whole thing about the conviction, right? We can all sit around in crypto and go, oh, well, I should buy, XYZ altcoin. Okay. Well, is a legacy investor going to buy that particular coin? No. The legacy investor is just starting. I mean, I got a phone call. I referred somebody to you. They called me up and said, Bill, do you have a course I could buy? I need to understand Bitcoin right now. It's a high net worth individual, female, age 40. Right. I was like, listen, go talk to my guy at BitLab. Here's the link. Right. And then, watch the market and then call me, and then I'll tell you why you need Bitcoin. But she already knew because, a silver eagle gold coin. We've talked about this before on the show, probably. Spot silver is like $28, $27 maybe. A silver eagle 1 ounce gold coin is trading at $44. You're paying like 40, 50, 70% above spot to get silver. Why would you do that? And people were selling Bitcoin at 27K. I'm like, it's like it's like Star Trek. It's like, Scotty, beam me off this planet. People need to wake up on Bitcoin and say, what happens when 40 million Fidelity customers push the green button and buy Bitcoin just to get their money out of the banking system? And once they get their money out of the banking system, like I was listening to somebody yesterday, Consensus, some Franklin Templeton, which is a big mutual fund. Yeah, they're getting into crypto, but she's like, people will come back to the banks. Oh, really? Really? People my age have grandmas that didn't keep money under their mattresses after the Depression. Yeah. They never put all their money back into the banks because back then the banks speculated in stocks, the banks failed, and there was no bailout. There was nothing. It was gone. So those people never forgot that. Nobody's ever going to forget the Celsiuses and the FTXs, right? No one's going to forget to hold on to their crypto, but most importantly, young people they don't want legacy as it is, and they're going to look at this and go, oh my God, I'm never touching this again for the rest of my life.
Yeah.
So how does that affect Bitcoin? Well, it's almost self-explanatory.
Yeah, I need to have like some confetti come down after that one, but it's so true, and I forget how much of a bubble you and I live in terms of the awareness we have of, the ability to know where to find the data and how to interpret it, at least on some, maybe we're not the best at it, there's always room to grow, but I can look at the fundamental, I can look at the things that signal good investment and bad investment. And it's just remarkable to me. And this is one of the reasons why I love this channel and having people like you on and everybody, all of you that are there in the audience. By the way, if you haven't yet, hit that like button, hit that subscribe button, come and join us, ding that bell. And also make sure that you come over here to Mr. Crypto Noble, crypto_noble. You can see right here on I have your Twitter up so they can come and follow you. But this is, I've never been more confident in something in my life. Now, with that, because I'm so confident in it, it does also require me, based on what I've learned through my own trading journey, overconfidence, the balance of overconfidence and actually rooted confidence in data. So I try to make sure as confident as I am that I still try to disprove my thesis, but looking at the data, the adoption curve, the regulation, the number of people, I think if we had the social awareness, but not as many people involved, let's say we had a third as many people as in the US specifically involved in Bitcoin and crypto, I think there'd be a higher chance of, probably high likelihood of being regulated out. But I think the US government was too slow to open up Google and just say, what is Bitcoin, versus just listening to what the narrative focus was. And I think that it has caught enough of it's caught the wind of the global sort of hearts and minds and really disinterest and disinformation and fear from the bad practices of government policy, everywhere over this last few years. And Bitcoin has taken on a life of its own. The digital ecosystem has taken on a life of its own. And with that being said, I do think that, I don't know if you saw it I think it was this morning. It may have been a repost, Bill. I don't know if you saw it, but there was a YouTube video put out by Brian Armstrong and I forget his chief counsel. Basically, it was about a 15-minute video that was in response to the Wells notice that they got. And it was framed really well. And they talking about, the fact that they have pursued what's the rule book? What is it? We want to follow. They've been trying for 11 years. They sent out requests for information. They got the bit license in New York, which is the toughest city in the U.S. to do crypto. I mean, I can't even buy Cartesi on Coinbase because of the regulation. There's so much regulation in New York, and there's so many different things that maybe there hasn't been an absolutely defined rule book for U.S.-based exchanges and crypto and that sort of world. However, there's all this subtext based on what has been charged and what hasn't been charged in a variety of different ways. And, the rule book for the bit license and all these. So they're trying to frame this like, okay, listen, and it's true. We need some sort of clear, even if it's a attacking crypto rule book, we need a rule book. Otherwise the space cannot move forward. So what if you had to predict over the next 3 years, where do you think we would be 2 or 3 years from now within regulation? Do you think Gensler is going to be still be around? Do you think they're going to finally establish that Ethereum is not a security? Like where do you think we're going to be in this sort of ecosystem?
Okay, here's a shocking comment, especially after hearing this for 3 days at Consensus. We don't need a rule book. We don't. Like we do not need a rule book to take dollars to an airport and go to a currency exchange, slide the dollars out and get yen and fly to Japan. We do not need a rule book for that. Yeah. Now, I understand if you happen to work at Coinbase, you happen to, these guys are in the trench trying to operate. I get it. They need to know what the rules are. At the big picture level, they're like, well, we need a rule book before we can buy crypto. No, absolutely not. You know what? That's what they want you to think. That's what they're trying to do. They're trying to scare everybody out of crypto because they know what's going to happen. Now, as far as Gensler goes, I don't know. Gensler is like a DVD player, or the SEC chair is like a DVD player, right? I mean, it's like, they have one guy in and, he'll have blockchain credentials and they'll put the deep state, slow Bitcoin down DVD in and push the play button and wah, 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 wah. And Gensler will go and they'll put the DVD in the next guy. Don't worry about that. Don't let that chase you out of crypto, right? This is where, again, a Consensus main stage. Well, the topic this week is absolutely about regulation. Meanwhile, on a side stage, they've got it's almost like some sort of VR AI-based conversation with an imaginary Satoshi. That should be on the main stage. So this whole idea of, oh, well, I need to leave my money in First Republic because of regulation. No, that is designed to slow crypto down. It's designed to slow you down. And we got to deal with Darth Maul candles as it is, because it's an organic process of our electronic market. An ironic statement. Yeah. So, these guys, they're making noise and Bitcoin's going up anyway, right? You had 4 months to get it below 20K. Now everyone's like, well, I can't buy it because of regulation. Then when it's at 125 in February, some people are going to go, wow, I can't believe I let Gensler dupe me out of not buying it. You can really get long-term trade location here. This is my opinion, right? I mean, FTX started with a solar eclipse. There's a lunar eclipse on May 5th. The research I've done over that basically means that eclipse season, because you had November, April, and May for eclipses. When eclipse season ends, whatever started in November, aka FTX crash, ends May 5th. Okay, now if you're not into the voodoo, okay, I understand that. But this idea that Bitcoin's got to make a new low and you're going to get to buy it at 15K, unless there's a calamity we can't foresee, I don't think so. That's my post-consensus conviction.
So with the earnings reports that have come out this week, we've seen some pretty, I don't want to call it remarkable resilience. I think one of the things that, this is tying into what you just said. I think one of the things that's clouding everybody's sort of determination is there is no real playbook in terms of historical analysis on any market for especially let's say since the 80s, let alone ever, but especially since the 80s, having a global economic shutdown when we have a global economy now with the amount of globalization that's happened. I've said global a lot in this sentence, but the amount of globalization that's happened due to the internet, due to trade agreements, due to, I mean, all of it. And so we had a global economic shutdown March 2020. And so now, while things could be tighter, I think there's, I don't want to call it a zest for life, but people were basically put in their houses and locked up for a year. You know, living in New York, I remember traveling during the pandemic, and I went to Montana, and it was at the like June, and the only thing, it was like a ghost town in New York. There was about 30% occupancy. People were moving out of the city. The only thing that was open was grocery stores. And so while it may not have been that bad nationally in the US, I think a lot of places at least tightened down significantly. And so I think now that we're having this sort of lasting impact from the inflation that's coming out of that, and then the tightening of the supply chain logistic issues. I mean, the printing that had to go on because the economy was shut down. There's so much that ties into all this. In addition to the fact that people are like, well, you know, I was shut down for a year, so people are just out there spending money, even though debt's at an all-time high. And so there's no real playbook to look to the left and figure out, okay, well, every time this marker is signaled, we've always gone into a recession. So now people, over the last 3 months, I've seen people kind of switch the narrative from a recession is absolutely going to happen to, well, maybe it's not. Maybe we're just going to go into a weird period of chop of uncertainty, and that's going to be not necessarily stagflation, but a period of like stagnant sort of uncertainty for a while until exuberance comes back in. But do you think that that's a likelihood? We're having so many good earnings reports. How do we account for? Is this sort of the, not even the calm before the storm? Do you think that this is, do you think that we're going to endure uncertainty long enough to not have a recession? And if we were to have a recession, do you think that there would be a stability within Bitcoin, or do you think it would follow suit with traditional liquidity in markets?
Okay, so there's a lot there. So let's talk about equities and earnings. So in equities, the market climbs the wall of worry, right? The more people worry, sometimes the more slowly people have to pile in, okay? And $1 in equities, we can make fun of legacy all we want. I guess at Consensus, they now call it TradFi. I have trouble with that. But, you know, $1 in stocks is better than $1 in the bank. It just is. I mean, you know, your stocks are insured against loss at a clearinghouse. Their value's not insured, but, you know, do you want to wait to get your money back from a zombie bank? Or do you want to put it in like, you know, S&P or Coca-Cola? I can tell you what old people are doing. They're like, oh my God, I'm hitting the Coca-Cola button, right? Berkshire Hathaway. Okay, now how do you look to the left on economics? That's essentially what you're saying. All right. So inflation is defined as too many dollars chasing too few goods. So you brought up COVID. Okay. The Fed printed $6 trillion in 1 month after printing $8 trillion over the last 12 years. Global central banks printed something north of 15 trillion in 1 month, and nobody produced anything because everything was shut down. So you had too many dollars chasing no goods. So you're going to run hot for a while in terms of inflation. You're going to run hot. I mean, what are you going to do? Drain all that money out of the system? No, you're going to run hot, which is why, you know, the Fed is trying to do what it needs to do to stop inflation. Now, recession. Obviously, when things are running hot, right? Silicon Valley, Wall Street, employment is going to, you know, I guess you'd call it rationalize. Okay. But that doesn't mean you're automatically going into a recession, particularly as we talked about earlier, right? No one's talking about Bitcoin, so talk about Bitcoin. Everybody's talking about a recession. Don't talk about a recession. Okay. Because you don't automatically go into recession. The economy is just cooling down And, the Fed, the economy is really going to be feeling the ache of the rate hikes soon. Now, how do you get something more serious in terms of a recession or an economic decline or a stock market problem? Well, you got to have multiple things going on at once. You got to have a hurricane that hurts gasoline prices, which impacts the stock market along with the geopolitical event and a bank failure. You got to come at it from 4 different directions, to really have like the type of recession that you had after 2008. Now, is that going to happen? I think it's October. Now, here's the great news. You don't really have to focus on that. You don't. I mean, is it going to happen? Yeah. Could I explain it to you? Yeah. Would everybody turn off the TV? Yeah. So let's talk about Bitcoin, right? Because the solution for all that, the reason Satoshi and them built it is for this day, right? So you don't, I mean, in research, you get paid for imagination, but I don't have to get the crystal ball out and tell you what's going to happen in October. I just have to tell you that, perhaps not investment advice, but, grabbing Bitcoin, right? And where your average price would, by the way, be where Michael Saylor's is. So I don't really think that's bad company, right?
Yeah.
Thinking about crypto, thinking about like if there was a terrible dip, about the fact that Avalanche can do security tokens, about Solana is going to come out with the crypto iPhone. Now, do you buy those coins today? Honestly, I don't know. I can give you a tactical read, but the way to look to the left is to say inflation has happened before. War, by the way, is inherently inflationary because the last inflation problem in the U.S. was the Vietnam War. These things have happened before, and they're happening again. The only thing that's new is Bitcoin. It's Ethereum, crypto. That's what you got to focus on.
I love it. I love it so much. Well, before we wrap up our time here with you, let's spend the next 10 or 15 minutes looking at the Bitcoin chart, and maybe it can be Ethereum, it could be Bitcoin, Ethereum, and Solana. It could be whatever. Let's look at three different projects and get your sort of tactical read. Okay, we're on the monthly. We can look, we can look at the monthly and the 3-day or whatever time periods you want to look at. But actually, I'll just let you kind of take it from here. I was going to frame it, but you can. What are you looking at going into May as the 2 strongest likelihoods of the levels and price direction, and what are you feeling? And it looks like you got something prepared here. We can just go through that as well.
Okay, so a word about Ethereum dominance, right? Ironically, right? It's like Ethereum's share of the overall crypto market. So I think Avalanche is the tactical project I like looking at, but I did want to talk about ETH's share of the overall market. And I wanted to just bring this to your attention. This is obviously a teacup. This is obviously a handle. Handles are brutal. They're awful. It goes back to what we said at the start of the show, where the best trade is the toughest trade, right? I mean, imagine trying to hang on to a long-term Ethereum position through all this. Wow. Right. But one day Ethereum wakes up and this is the teacup and this is the handle, and Ethereum dominance goes to 40%. Right. Because, the next cycle, if it's a super cycle, it could start off with a 2-coin freight train of Bitcoin and Ethereum, where like a lot of altcoins get left behind because Bitcoin and ETH go up a lot. Just something not a lot of people are talking about. Now, everybody is talking about Bitcoin dominance. This is the daily chart. Right. You've got, a clear, the bigger the base, the higher into space phenomenon here. Bitcoin dominance goes straight down as layer ones and altcoins shock everybody. You have a multi-year base. And when you have a multi-year base, like I said, the bigger the base, the higher into space. So once it takes off, it just goes, which is why, even though people think it's boring, I'm like, listen, what does the world look like? What does your P&L look like with Bitcoin Bitcoin dominance at 72%? Because that's where it was when COVID started. People are like, oh my God, Bitcoin dominance is 72%. Bill, when was that? 1970? No, 2020. Right now, ETH monthly, if you look at the DeMark work, okay, Tom DeMark was a quant technical analyst. These little numbers indicate where we are in the stage of a trend. So it'll go, the green numbers will go, 1 first day or first month, 2, 3, 4, 5, all the way to 9. Now, my little superstitious thing is when a trend starts, the dip is on the 4, right? So you have 3 up months because this is a monthly chart. And then you'll get the dip on the 4th month. Well, what did we get? Darth Maul candle, sharp dips. They handed it to you, right? This is the dip. And you could conceivably have, at least 5 more up to sideways months. It doesn't have to be straight up, but, Ethereum at 1,800, buy it or sell it. Buy it, not investment advice, right? Bitcoin, same thing, right? Bitcoin goes straight up, and then your dip was a pause. Like on a monthly candle, like this doesn't look like anything. This is like your still standard spinning top, right? It just looks like the pause that refreshes, just like February. So, I mean, if we go, pause that refreshes, God candle, you got to be careful that this thing doesn't take off right before the Fed, continue right after the Fed into the lunar eclipse. You got to put these two things together, even if you don't like that stuff, right? The solar eclipse in April, it's out with the old, in with the new. Okay, Bitcoin went straight up into the eclipse, right? And then it went down afterwards. So it's in with the new and then take profits. The lunar eclipse on May 5th, same thing. Okay, straight up into the eclipse and then profit taking thereafter. And then maybe they do this again in the second half of May. Point is, on a monthly chart, hey, everybody, think of it this way. Just experiment. Go outside, have a cup of coffee and go, was that the dip? Was that the dip? Okay. Now, we did stocks. Here's just some trivia. This is Bitcoin into the lunar eclipse. So, I kind of match the conditions that we have for this eclipse. There's usually a rally before. So there's 2013, 2016, 2017. There's usually a rally before the eclipse, and sometimes there were rallies after. So I'm not trying to be a moon boy, but I am trying to tell you that sell in May and go away may not be until the end of May, right? And I'm not just like, making that up. Now, if we go to something tactical, okay. No, is that I want to look at Avalanche. Okay, Avalanche, Solana, and Near, it's funny. It's funny, not funny. They're at consensus. Near is there in kind of a big way with a huge booth. Avalanche and Solana are reminding everybody about how great their tech is. Okay.
Your screen kind of got a little janked up there.
Okay. Let me just share the screen here. Okay.
There we go.
So here's Avalanche on like a 4-hour chart, and I'll actually try to draw the hidden pivot analysis live. Okay. So this is Avalanche on a 4-hour chart. Right. And then let's try the hidden pivot analysis to see what we get. Okay. So for the moment, let's say, let's say that 16 was the low and that you have a shot at taking out 18. Now, what I told people this year is that you're going to get altcoins moving in spurts. In other words, when altcoins move, you don't want to buy strength. You don't want to buy it after 10 up days. Because if you bought Avalanche in here, you got completely hosed. You got to buy Avalanche when it is like down. Okay. You got to buy Avalanche when it's down, right? Okay. Here's Avalanche and it's down, right? Avalanche takes out 18. It could go to 29. So I don't think these things are things you hold all year, but I do think there are tactical opportunities, right? So, your stops can be down here, or you can buy any dip if it takes out 18, right? Now, if you do the hidden pivot analysis a different way, okay, which again is pretty outside the box, okay, the level that could matter is 1760. So it's interesting about this hidden pivot analysis style that it's almost like you can find support and resistance points that the naked eye couldn't necessarily see. So very interesting to see if Avalanche can actually get above 1760. You could have upside to 22. Now, I'm not a cowboy in these big altcoins, but if it's Bitcoin taking off in the first part of May, right, then maybe it's altcoins up until like May 15th, and then Bitcoin resumes. So everybody just got shaken out here, right? And what did we just say? Like, look how nasty this is, right? Like everybody who bought it over here got stopped out, right? Then everybody who tried to buy it in here got chopped out. I mean, everybody who bought it off the low just got stopped. Everybody. So who's left to buy? Nobody. Because everybody's been stopped out. So if you take out resistance, okay, that's that has to happen. So we're not going full stupid cowboy here. We want to see the market give us a message. But if this is what you can get on an Avalanche 4-hour chart, I think if Avalanche can go, you can get other coins to go, right? Solana came out with some kind of chat GPT thing that allows a chat GPT extension, as I understand it, to look at on-chain data. Has anyone talked about the merge? Has anyone talked about crypto and AI? I heard it once at Consensus, twice. And the second guy who said it was William Shatner, who is 92 years old, who I grew up watching as Captain Kirk. It's pretty funny how the old guys got to talk about things like AI meeting crypto.
He's a real moon boy.
Yes, he is a real moon boy, right? For real. Doing a lot of futuristic projects at his age. It's kind of his NFT collection was dropped yesterday.
Oh man.
Right.
Well, Bill, I always appreciate having you on. Look forward to every Friday. You give me a chance to ask some questions and not just be talking in my own vacuum. And so I appreciate, having the honest discourse. And I want to challenge everybody, not a challenge, I want to encourage and empower everybody watching the channel right now to not only go and follow Bill, which is at @crypto_noble. And I'll pull up your Twitter as you leave here in a second, but also that you make sure, no matter how sure you are or how much knowledge you think you may have, to always be open to a conversation with other people, because that's where you learn. That's where you challenge your insight. That's where you get a new viewpoint on stuff. That's where you get a different lens on what it is that you're looking at. And you cannot grow without looking at things through another lens. So with that being said, Bill, I really appreciate you being on here. Is there anything else you wanted to share before you went, or anything you got coming up, or other than the socials that people can find you out?
Well, today's the last day of Consensus. So if anybody's at Consensus, I'm the big guy with the shades. Study up at BitLab Academy and make sure you get signed up. Believe it or not, there are a lot of people coming in legacy. So, Kelly's going to have a lot of new decorations on his shelf. So if he's offering you a reasonable price, take it, because legacy is coming.
I appreciate that. Now, you may or may not know this, Bill, either. The whole reason I'm back in Atlanta right now is I've been rebuilding me and the entire Hit Network, but I've been, at the helm of rebuilding BitLab Academy from the ground up, and we're launching. Basically, it's going to be everything's rebuilt from the ground up. New website, new courses, all video focused content broken down into topic-based focused lessons. So it's not 45-minute videos. They're 7 to 12-minute videos. Quizzes after each lesson, and then a cumulative quiz for the entire course. And it's everything from Bitcoin 101, blockchain 101 to candles, candle patterns, chart formations, technical analysis, psychology of trading, which I think, by the way, if anybody hadn't noticed on this channel, half the conversation Bill and I have on here, we bring up charts, but the hidden sauce, the secret sauce in making it in any asset class is understanding the psychology in the market. And the best place to start with that is understanding what your fears are and what your greed is, and what trading assets, especially a volatile asset like crypto, any crypto asset, will bring out not superimposed, but it will bring out a highlighted version of what type of person you are. If you don't know if you're emotional or not, get in the charts. You'll see if you're emotional. If you're not tactically driven, you will see it. And it's okay. None of it's right or wrong. But the quicker you can know who thyself is, and I don't mean to get philosophical here, but like I think I've learned more about myself since I got in the crypto markets since I ever have in my life, because it makes you really take a look at what you need to do versus what you feel like doing. And that's very important here. So with that being said, Bill, I appreciate you. And I'll send everybody your way. And I appreciate that. I appreciate you spending your Fridays with us here.
All right, man. Thanks for having me.
Appreciate you, brother. I'll talk to you soon. Have a good weekend, buddy.
You too.
Now, everybody, this is where you can find, where did I have it? This is where you can find Mr. Bill Noble at crypto_noble. While you're coming over here and giving him a follow, make sure that you come to the BitLab Academy page right here. Come and get it done in about 10, 15 minutes. We'll be doing a drawing. Come and follow BitLab Academy. Come over here, hit that follow button, and retweet this daily tweet. It's pinned in the top of the comments here, and hit that like button right here. We will be drawing a random name to give away some stuff today. And so, you know, you all are being a part of our community, and you're also helping spread the word, and we want to make sure we give back to you all as well. We've given away a lot of stuff, everything from $100 in stablecoin to lifetime memberships to 3-month memberships, to 1-month memberships to all kind of stuff. So throw, actually, I don't even need you to throw it in chat because I'm gonna do some TA as we wrap out the show on a bunch of different, as many projects as we can. But I do want to say, what's the last thing you bought? What's the last thing you sold? Throw it in. You can put B, or bought, and then the coin, and then sold, and then the coin. Let me know in chat. Let me know down below if you're watching somewhere else. And if you are watching over on the Hit Network, shout out to all you lovely folks. Make sure at some point that you check out all these socials down here, that you check out bitlabacademy.com. Come and sign up right here. I'm going to be doing a big drawing next week for, you're entered to win on this as well if you sign up, and we'll be sending out weekly updates on, charts, some setups, discounts, giveaways, new updates, what's going on in BitLab. It's not a sales email. There's an intermix of actually great alpha along with updates about the different new course content and all kind of stuff here. But again, new BitLab Academy, this is what it's looking like. You know what I mean? And you can sign up when you'll be able to sign up once this goes live for free for the basics, Bitcoin 101, blockchain 101, and a few lessons from each course. So you'll be able to sign up for free. And then you can upgrade to all access whenever you want. But also everybody that signs up before this, if you're getting all access, you're going to be able to keep this lower price for the life of your account, even though once this goes live, the prices will be going up. So I want to just get you all in there because we've got so many new courses in the new BitLab. I'm so excited to share this all. So get involved. Now let's go ahead and look at the markets. What's going on here? Bitcoin dominant still riding right at this level. Are we going to break through and get the next level up? Let's go ahead and get option click. What is this? So the 382 fib, which is the next spot up, is 52%. However, there's not. Okay, this does look like there's bottoms right here. So yeah, this is a good option. If the dominance does break to the upside, we could be seeing a large flight for liquidity into Bitcoin, outpacing what's going on in the altcoin market. So we need to pay attention to that. If you have a diversified portfolio, it's not as bad. But if you are all in alts, it may be time to look at what your strategy is, because there is a potential that this breaks out and Bitcoin outpaces the altcoin market, meaning that while even if altcoins didn't go down, your value of your total portfolio as measured in Bitcoin would be going down as this dominance explodes. So you just need to pay attention to that. Know what your strategy is. The USDT dominance, it's finding support. It kind of broke through and sucked right back up. Tried to test it again, and now we're getting a little support here. So we just need to pay attention to this. Now let's go ahead and jump into the markets. Let's go right down to the 4-hour. We're going to go to traditional candles. Now we are going to go to one of our templates. If you don't know how to set up, you see how I have all my times across the top here? If yours just says D or M or 4-hour, you can just hit the little arrow next to it and put stars. Every one of these things that you star basically puts them right up here at the top. And then I have all my templates here. When you save a template, which is these 4 squares. You can just put a star next to your template, and whatever the first letter or character is of that name, when you start, you get easy access to your different templates. So I can go from my MACD and stochastics and moving averages all the way and very quickly come over to the BitLab trading stack. And by the way, we've got some huge updates coming to the BitLab trading stack, which everybody that already has it, you'll automatically get the updates. You'll just have to come here and remove the indicator and then come back into back in here and basically reload it, and it will load with all the updates. Now I'm going to come back here, show 3-dimensional candle, show only last divergence. We'll do full. There we go. Now, what's going on? Where are we at? Let's look at the charts. What are the levels? A lot of stuff going on here. We're right in this zone. We've been pulling down. We've had a little bit of a pullback, but a strong bounce here. This was the the push up Darth Maul candle he was talking about, and then retracement back up, but it is a lower high. And this is within the sort of framework of this projected sort of downtrend. And look at these candles both bouncing, rejected perfectly off these levels. So we got to pay attention to what's going on here. There's no clear direction as to what's going to happen within the markets right now. When we look at, if we come out to the daily, we can see on the daily, this is concerning. We're getting a bit of a push up, but the rejection at this level. But what I'm looking at is right here, the relative extrema. If we look right here on the chart, we can see that the relative extrema, which measures the health of moves within a trend, we can see when these are to the downside, this is likely going to find support soon. Boom, found support. And we can see this pushing to the upside. The second it started pushing to the upside, we started getting these pointing to the upside, which is downward pressure. Is what this means. This is upward pressure. This is downward pressure. And we can see this came right into this trend line, and we got a bit of a rejection off of it. So the question is, we can come here, option F, from the bottom to the top. The question is, look at this. This golden pocket is right where this high volume node is right here as well. So right here, we've bounced right at about the 382. So the question is, are we going to hold in this level? We've got to just pay kind of close attention to what's going on here, because I feel like the market's in a bit more of a shakeout sort of, it's shaking people out in both directions. So even if this were to break above this, I would wait for either a retest or a break past this previous high, because there's a lot of weight above here since we have not been above this level since, let's see, since June of 2022. Okay, so we've got a lot of not only time, but bearish pressure against us right in this region if we do come back up to this level. So pay attention and trade with your time frames and targets in mind. Now, when we look at this on the, let's see, 12-hour, we're getting some bearish divergences on hidden volume, and each one of these has resulted in a small pullback. But we are forming on the smaller time frame. If we look at the 4-hour, the smaller time frame, there are some higher lows, but we have a lower high here as well. So they kind of cancel each other out. Now on the 4-hour, we're starting to see on this pullback, the relative extrema starting to show some unhealthiness in the downward price action. However, we have seen in the past, I mean, look at this entire move here. The relative extrema was unhealthy the whole way down, and it continued going. So this is not going to give you a perfect signal in and of itself. What relative extrema does is it gives you context within the nature of what's happening with your other indicators. And when you have a blue symbol mixed with the relative extrema on the downside like this, and you get this low pivot at support, you know that this was a likely good buy. Similarly, right here, you're coming down to test again. Now this was these two things were canceling each other out: bullish pressure, bearish pressure. So you kind of ignore this at the moment. But then the next stage, these are still sticking to the outside, and this flips blue. And then we get the green bullish divergence on volume at this level, and we're at support. So this would have been a buy for me at this level. Where we're at right now, looking at this 4-hour, there's no, let me go ahead and go to show. Let's do 7, 4. These are the settings that I prefer on here: 7, 4, and 90. Now, let me actually go here again. Let me scroll down. Back to histogram. I don't know why all these turned off, but that's okay. We did, look at that. We got 5 bearish divergences right here coming into a known resistance level. that would have been a good spot to take profits if you had to sell an order here or take a short, because we had bearish divergence going into this up move. The relative extreme finally sticks out on the candle before these bearish divergences. So we're already kind of looking at it. We have the overheated zone right here on the significant movement. So we have the 1, 2, 3, and 4 would be being at resistance, and we have 5 bearish divergences, right? So we have a good signal to either take profits on an up move or take a short for downside price action. Now the question is, let's come down to a smaller time frame. The 1 hour candle, 1 hour candles, 1 hour chart, bearish divergences. Now we're coming into some bullish divergences here, and look at this on the 1 hour. Looking very unhealthy on the downside, and we're getting a start of a blue flash here on the 1 hour chart with 3 bearish bullish divergences. So the question is, if we do come up to this level, we want to pay attention to what happens at this level. I'm thinking because we had this washout and we were able to come up, even though we have this downtrend, that it's likely that we will get a try to the upside. The question is going to be is when we get the price action to come up into this level here. We're currently at 29,080 or so. When we get back up to 29,300, can we break through this or not? If we're able to break through this, I think it's very likely we'll at least test this, which is still, it's not a huge move, but I mean, it's a 3% move from here. I would not necessarily recommend front running this move because we are in this smaller time frame. We're looking at the trend on the 1 hour. This is a downtrend on the 1 hour, right? So if we are in a downtrend on the 1 hour and we've been showing weakness, then I would sort of wait for this to probably test up into this region, look at the strength here, and then maybe try to catch the breakout here, either just front running it with a very tight stop, or as it comes out more conservatively, and the more appropriate thing to do, breaking out, retesting, and taking the trade once we break this high of that before the retracement. Now, let's go ahead and look at what we got. We got Cardano. This is, remember, this is that larger time frame. Let's go to the 4 hour. Okay, we're on the 4 hour. This is that large. Come on. This is that medium time frame sort of channel that we are trading up. We've lost it, and look at this bounce. We have like an expanding, broadening wedge here. Just based on the previous support and resistance. And where are these support and resistances coming from? Well, I have 2 different zones here. This is support, and then you can see here rejection, support, support, support. So this is a well-established line. And then of course we have the point here with these 2 bounces here. So we have 2 established lines here, as well as this support line from this channel that has flipped to resistance right here, where we did break down, reconfirm this, flipped it to resistance, and now we bounced here, came all the way back up to it, came all the way back down. So on the one hand, because we have this broadening wedge slightly aiming to the upside, this, I wouldn't call this specifically just a broadening wedge because of the nature how it is nested within these other chart formations. But I would say be cautious because of that. There's a little bit of a bearish bias here, and we have the lower highs here. Very similar trend line that we had on Bitcoin, like this we see. Now with this, look how far outside of look at this relative extrema to the downside. Very strong candle to the downside, which actually is giving me some bit of a, I won't call it a bullish bias, but there's a sense of bullishness here. I will say again, before we wrap this all up, come over here to BitLab Academy, follow us, retweet this, hit that like button. We're going to be doing that drawing here in a moment. Now, Cardano is now starting to hug this upper band here. If we could retest this and break out the next level right above us, this breakout would be not only this previous high right here. If we're able to break through this 41 cents, 40. We have a very short, shallow target right above us at 42.90, 42.80, 42.75 ish. If we were to come straight up here, 42.90. Now, if we were to break this, then I think that things are actually turning around for crypto markets in general. Liquidity is coming back in. If we're able to break these 2 levels, then our next target up would be somewhere in this region, 48.39. Now, coming over here, let's look at Avalanche. We looked at that with him a second ago. Let's look at option save. Let's look at some of the other alts. We got XRP. XRP is looking, it's consolidating in a zone. Consolidating in a zone, also forming a bit of a lower high. Option T gives us the trend line come down. If we were to push up, I would look at resistance about the 50-cent mark if we were able to get up there. But we also have these lows right below that. Where this was bouncing, bounce. So I would actually think that if we very well could get rejected here at 49.50 and then retest back down. Now looking at this this is looking a bit more bearish. Look at these lower highs, wick, lower wick. Now the relative extrema, way outside of the bands, and we are neutral here. So what does it look on the 1 hour? 1 hour is looking like there is some attempt that may come in for a small bounce. If we can't clear at least these candle highs, then it might just be a small bounce to continue to the downside. If we are able to break past this, then we can look at those upper targets. Now, I've got to go off camera here. I've got to come over here. I got to log into my BitLab Academy account so we can do the drawing. This is going to be for 3 months. It's going to be 3 months giveaway, and it's going to be for the courses. So let's see, copy link. Now let's come on here. Let's go ahead and do the giveaway. Oh, I got to log in with Twitter. I love doing these giveaways with y'all. I really appreciate y'all. Have you hit that like button? Have you hit that subscribe button? Ding that bell. We've got, how many people we got in here right now? We got 175, only 136 likes. Let's come on. Let's get it. Let's get in. Let's get involved. Now let's do the link right here. Here's for the giveaway. I will be on BitBoy Crypto after this stream. Let's see. Should like the tweet. Should follow. There we go. You have to like the tweet. Go do it now. And you have to follow that Academy BitLab as well as retweeting it. So go and do those things if you haven't done it. I'm going to give you about 15 seconds. So that way this gets out to you guys live. I appreciate you all so much. I'm going to be on BitLab Academy, on BitBoy Crypto, doing some TA as well. So come, let's go in there, throw the lab coats in the emojis and chat. Shout out BitLab crew, all the things in the BitBoy live stream here in a few minutes when we wrap this up. Now, okay, let's go ahead and do the giveaway. So I've got the thing. Okay, so boom, boom, boom. So where is it? Start, select winner. Oh, get the data. Got to get the data. All righty, let's see who won. Rami Quaz. Rami K was. I'll reach out to you after this. Alex Green, if you could take this down too. And I will reach out to you, and we're going to confirm with you. Not only am I going to reach out to you, but we're going to want to get you in the Discord as well, because we want to make sure we're confirming who people are. So we're giving people the right stuff, and you're also not, falling for anybody randomly trying to scam you. It's going to be me, and we're also going to connect in Discord. So there's multiple points. But with that being said, I love you all. I appreciate you all. Hit that like button, hit that subscribe button. I appreciate every single one of you for being here on a day in, day out basis. Now let's head over to the BitLab Academy. Let's head over to BitBoy Crypto and check out all the stuff there. Everybody have a wonderful day. Adios. Adios, muchachos. Thank you for coming. Thank you for always tuning in. BitLabAcademy.com. Hit that like button, sucker.